All right. Happy Wednesday, everyone. Very excited to be here. It is a very special time for myself in the city of Atlanta. If you don't know, the Braves won the World Series last night. It was a very, very joyous time, and I'm excited because, Atlanta itself has had some very, very topsy-turvy type of experiences with sports. So just the fact that we were able to go ahead and clinch this one, very, very excited. So I'm starting today on a high note. Very excited to have our brother Elisha to join us on the stage. I'm sure he's going to be here momentarily. But essentially, I wanted to have this discussion with everybody because I do a lot of networking. I have the ability to talk to people who are not only, subject matter experts in this industry, but specifically those who are willing to answer any of the questions that I have. And I just felt as though with some of the things that I didn't know that I had the opportunity to learn just by talking to this brother, I wanted to be able to host a session so that we all could learn those type of things. So I'm pretty sure that he's going to be joining momentarily. But again, my name is Jory Myers. I am the owner of Atlanta Dispatch LLC, and very excited, like I just said, about the Braves. And I don't even know what to say about that. But anyways, so commercial insurance. Okay, I got a couple messages. All right, commercial insurance. For everybody that knows that's in this industry, this is one of the things that you cannot get around. I mean, if you want to be in the trucking industry, you have to be able to afford the insurances. And not only that, in order to get your MC, your motor carrier number, that's one of the upfront requirements. So with that being said, there are different levels, different minimums at which you must have in order to, operate at, different levels. So those are some of the things that we're going to cover today. And let me see where this brother is. All right. Yeah, I didn't think he was going to be. He's fashionably late, y'all, to this Clubhouse audio. All right. So we do have our brother now who just joined the stage. Hey, man, how are you feeling tonight? Elisha, are you there? Oh, it has been a while since you've been on Clubhouse, brother. So look, bottom right-hand corner, go ahead and unmute yourself so that we can hear what you're saying.
Hey, Jerry, can you hear me?
Yes, sir.
Hey, I apologize. I was having some issues with my AirPod.
Oh, no worries, brother. No worries. We got the stage nice and warm. So everybody, my name is Jory Myers. We have our esteemed guest joining us right now. Mr. Elisha, can you please introduce yourself and let the folks know who you are? And again, oh, my bad. There you
go. I got it. Hi, guys. How you doing? My name is Elisha Petite. I'm the owner of the ACE Insurance Agency and also the transportationandlogistics.club up here in West Orange, New Jersey. We only do commercial truck insurance for truckers. We write in 25 states.
All right. And brother, how long have you been in the commercial space, the commercial trucking insurance space?
I've been in the commercial trucking space for the past 3 years. Started off in the home and auto, but prior to that, I was actually in banking and insurance. Worked for PNC Bank and JP Morgan Bank for over 10 years prior to opening up my own insurance agency.
Okay. And what made you decide to, change over from, the traditional?
So it was one of those things where I always knew I wanted to work with my own people. But it was just like very difficult working in corporate America when nobody else looked like me. And I want to say it was around November. It was November of 2018, actually, where I actually started the process of opening up the insurance agency. And then, it was one of those things where it's like failure to launch. You're scared to pull the trigger and be an entrepreneur. And unfortunately, I ended up losing my job in September of 2019. And the moment I lost my job, I just went full force with opening up my insurance agency. So in April of 2019, I actually opened the doors.
Okay. Hey, man. Well, I'm not a stranger to that situation of being forced into a different path, but I'm just, I know looking back in retrospect, you can say that, that's probably the best thing that ever happened to you.
Yes, it was. It was literally the best thing that ever happened to me. And I can honestly say, because it happened on a Friday as I was walking out the door, leaving to go home. And ironically enough, I had already cleaned out my desk.
What?
So when it happened, I walked out the door and not even nervous, wasn't scared, little anxiety, but at the same time, I knew I was going to be okay. Called my wife and I called a couple of my colleagues, like, hey, this is what just happened to me. And I never looked back. And I can honestly say, as a result of it, I'm now living the life that I've always wanted to live. And I've made more money now than I've ever made before working for somebody else.
Yes, sir. Yes, sir. So if there's a message already from this stage, just because some trying things happen in your life doesn't mean that, you're not being prepared for something better. And again, I've experienced exactly what you're talking about. And, I'm very pleased with everything, the way it happened. You know what I mean? I don't feel like I would have the same resolve if things were different, So, I'm just, thank you so much for sharing that, brother. And so now you operate in how many states, you say? How many states do you write commercial trucking insurance policies?
25. We're in 25 states. So we cover all of the East Coast. We don't go above Connecticut. So we go Connecticut, New York, New Jersey, Pennsylvania, and all the way down the entire Eastern Seaboard.
Okay.
And then we have Texas, Ohio, Indiana, Michigan, Illinois, some of the Midwest. And then we one of the states that I can tell you now unequivocally, we will never cover California.
Exactly. I was coming there, man. But tell the people why. Why wouldn't you cover California?
The laws in California are just off the wall. And then also some of the licensing requirements that they have for me as an insurance agent, I personally believe that is unrealistic. In addition to a lot of California has their own compliance issues that they have for truckers, and I just don't agree with them. And unfortunately, a lot of the guys that are out in Cali, they have very high ISS scores and things of that nature because the DOT officers are just very aggressive. So it's very difficult for an agent to write a policy that has realistically a reasonable premium for a trucker in the state of California. So, it's one of those things where if you're not an agent in California, you typically nobody touches it.
Okay. And you said something right there. You threw out a little some jargon I don't even know. What's an ISS score?
In-service inspection scores.
Okay.
So,
okay.
When you get pulled into a weigh station and you get inspected, that's, your ISS score is what's being affected.
Oh, okay. So basically, anytime you go into a weigh station and let's just say that you are just a little bit overweight, and it's to the point where you can't even just, slide your tandems and get things right, they're keeping note of that, and that's gonna stay on your record. Does it have a certain amount of time that it stays on your record?
To my knowledge, it stays there for 3 years.
Okay.
If I'm not mistaken. It does stay there for 3 years. And those scores are looked at when you go for renewal for your insurance.
Wow.
That is one of the metrics that's weighed on.
Okay. All right. Yeah. I appreciate you explaining that to us, man. And I know that, a few of my, so guys, I'm a dispatcher, surprise, but a few of my clients, they have you as a, their insurance agent. And I see some of these COIs, some of these certificate of liability insurance documents, for the folks, we'll say that's a COI. Some of those come on the Accord form. What's the difference between the forms? Like coming on that Accord form versus, the way that Progressive would do it. They have their own format. Why is that?
Yeah, so Progressive don't really shoot out Accords. So Progressive they put the certificate of insurance on their own letterhead.
Yeah.
On their own letterhead, they have their own format. But unfortunately, a lot of brokers won't accept that, and some shippers won't accept it either. Which it's unfortunate, because if you're one of those individuals that just called up Progressive Direct or went on progressive.com and tried to buy your policy that way, that's the only way you can get your certificate of insurance. Realistically, the COI should be on what's called an Accord 25. And you'll know if your COI looks right, because it's on a very official looking document. It looks old as dirt. Yeah. Yeah, there's nothing modern about Accord 25. But it literally lists every insurance carrier that you're doing business with. It lists the policy numbers, all of your limits of liability, and there's a description form. And sometimes if you have limitations to your to what you can and can't do, in that description form, it'll actually be there. And that's one of the reasons why brokers and shippers prefer Accord 25 over just a description of your insurance on Progressive letterhead, because it just doesn't give you enough information to determine whether or not I'm going to do business with this individual. One of the things they really look for are what's called the AM Best rating for an insurance carrier. Now, Progressive is one of those carriers that they're A++ rated. But if you don't have Progressive, there's a NACE code on that Accord 25 that it identifies what insurance carrier you are actually using, because you may have a collection of carriers to make up your commercial insurance package. And that NACE code, when a broker runs the NACE code, it'll tell them what their AM Best rating is for that particular carrier, that insurance carrier, and they use that to determine whether or not they're going to do business with you or not.
Wow. I'm looking at that right now. I mean, to be honest, the only thing I really knew was the Accord form, from being a dispatcher for the last, 4 years or so, and seeing how, I was dispatcher for a corporate, corporation, and seeing how theirs looked. That's what I knew, and just how efficient it looked. Everything that I need to see is kind of like already kind of laid out. With Progressives, you have to search for what's going on, so, and I'm seeing the fact that they even have the area where you can have the different insurance providers, and the codes that you were just talking about. So I'm actually looking at this bad boy right now just to, make sure that I'm familiar with it. But, okay. Yeah, man. Oh, were you about to say something?
No, I was gonna say it's all there. It's this is one of those industries where everything you do is public information. Uh-huh. So, yeah, that Accord literally details everything.
Right. Okay. So, look, let's just start with some basics, right? Let's just start with, commercial general liability. These are things, there are certain coverage levels that you have to have in order to get your MC, but it kind of changes with the type of equipment that you're using, right? Like a cargo van versus you have a box truck or a semi. Like, why is it different?
Weight requirements. So they look at the type of equipment you're using to determine the amount of liability insurance you need to activate your authority based on the weight requirement of the vehicle, and it's really just based on liability. How much damage can you do in the event you do get into a claim, right? Mm-hmm. So a cargo van, which is 10,000, they go up to 10,000 pounds. To activate your authority with a cargo van, you only need $300,000 in a combined single limit auto liability policy, versus where with a box truck or a tractor, or even a hot shot, to my knowledge right now, that is still $750,000. on the combined
Right.
single limit. Yeah, because those are actually hot shot may be 10,000 because they can actually only go up to 10,000 pounds unless the driver has a CDL. The box trucks and semis, box trucks are up to 26,000 pounds, so they're 750. Semis can go up to 80,000 pounds, so they're also 750. But as we all know, in order to secure a contract with a broker or a shipper, they all start at $1 million.
Right.
Yeah. And these are limits that that are being enforced today. Unfortunately, there was legislation that passed by Congress where, in order to activate your authority, once it's enforced, and it's already in law, it's just not being enforced by the FMCSA. Once it's enforced, these limits are increasing to $2 million.
Wow.
And that's just to activate your authority.
Okay, and when you say 2 million, are we talking about 2 million in the aggregate? Like you get
2 million in the auto liability, 2 million combined single limit auto liability policy. So
okay.
When you say general aggregate, you're referring to the split limits on the general liability policy.
Yes, sir.
Because there's multiple line items on a commercial insurance package for a trucker. We have the auto liability, which covers the vehicle on the road in the event you get in an accident. No different from the auto liability policy that you have on your car. Then you have a general liability policy, which has a $1 million per occurrence. So every claim that's filed, they'll cover up to $1 million. And they have a general aggregate of $2 million, meaning if you have more than one claim in a policy period, the most they'll cover is $2 million during that policy period.
Gotcha. Okay.
Yeah.
So look,
and then we have the cargo and everything else that falls below. Yeah.
Okay. Yeah, we could talk about the cargo, and actually, I want to talk about automobile a little bit more too. But just talking a little bit more on that commercial general liability. What is that actually meaning? You know what I mean? Because like you can be driving, and something can happen to a car, to your vehicle, or to the product itself. So you got your automobile, that's, your automobile liability that's taking care of your car. I mean, your vehicle and the other vehicle that's involved, if there is another vehicle involved. And then the cargo, that's talking about whatever you're hauling. So what is that commercial general liability really talking about?
So the commercial general liability policy has a few line items on it. One thing is it basically covers your company as a whole. So let's say you get into litigation as a result of an advertising infringement, it's going to cover that. Let's say I've actually seen the general liability cover a trucker when he backed into a dock and damaged the dock, and they actually filed a claim to him. They filed a claim against him for damages to rented property because he had a contract with them.
Wow. Okay.
So on the general liability policy, there's $100,000. Typically, there's $100,000 that's built into the policy for damages rented to you, and that particular claim fell under that. So you have that. I'm just trying to think. Or if you have, let's say you get into an employee dispute or something like that, the GL can help pick up that as well. And for all of you that advertise on like social media, or you guys do a lot of social media blogs, there's a thing on there called personal and advertising injury. There's $1 million line item on your GL policy for that, and it covers. Let's say somebody you try to steal their marketing idea or their marketing concept, and they say they are personally injured by it, emotionally injured by it. Then it covers that.
Wow. Okay. I didn't think that the mental duress was going to be covered under that policy. Okay, but let's just say, let me say it like this. Would you say that it covers you if something happens to your truck, even if your truck isn't moving? Like, let's just say a kid, your truck is parked. All right. Story. You are going to a truck stop. You have to use the facilities. You turn your truck off, so there's nothing about your truck that's moving. But there is somebody that's just, patrolling a lot, let's not say it's a lot lizard, but let's just say it's somebody, okay? And they're climbing up on the stairs to try to open the door, and they slip and fall. Who is liable? And let me just ask first, who's liable?
So there's a gray area there.
Okay.
In a situation like that, there's an extreme gray area there. They unfortunately, the person could try to file a claim, even though they weren't even supposed to be on the property, on your property. But the auto liability, at that point, the auto liability and your general liability will probably go back and forth as to who's going to cover the claim. First and foremost, they might try to push it through your auto liability first. Yeah, and then from there they probably push it back over to GL. That's one of those things where underwriters get involved, and not underwriters, adjusters will get involved, and they'll try to figure out who's going to pay this. Of course, nobody wants to pay it, but if they even are going to cover the claim, because they might even just say this is nonsense and just throw it out. Yes,
sir. Okay, all right. Oh, I can see that. All right, and when it comes down to it, would you say that? All right, so it's kind of easy when it comes to the cargo. Cargo is as simple as, if you're working with most brokerages, they require you to have at least $100,000, for box trucks and semis. So cargo is just basically saying anything happens inside to that cargo while it's being transported, we have you up into this. Am I missing anything when it comes to that?
No, it's straightforward. It's their merchandise is in your possession, and it's your responsibility to deliver it in the same condition that it was provided to you, whether it's a dry van or reefer or hazmat. And if it is delivered on the opposite side, I would say at part B of the pickup and the drop, they will file a claim. I've had companies file a claim against some of my insureds for delivering meat that was 2 degrees colder. Again, colder than what it was supposed to be. Yeah, not warmer, colder. And it was simply because this Angus beef, was supposed to be delivered fresh. So they wanted it at a certain temperature. But unfortunately, the motor carrier's reefer did malfunction. And the thermostat wasn't true to what it was reading inside the reefer. And when they got there, they measured the temperature, and the meat had froze. And because the meat froze, it's no longer considered fresh. Right. It's not considered previously frozen. And they filed a claim for it. And it was a difference of, I think it was the buyer was paying $3.13 per pound for this meat. But because it was delivered frozen, not fresh, the value of it dropped to like $1 per pound. So they filed a claim for the difference. Yeah. And not only that, but the trucker could not drop it there. He had to then take it to a meat salvage facility. And the original drop was in Pennsylvania. He had to take it to a meat salvage facility somewhere in Virginia that will purchase this meat, repackage it, and sell it.
Wow. So look, I can't even lie to you. I've experienced something like that similar, you know what I mean, recently. But just to talk about it a little bit more on the back end and I guess the stuff that people don't really talk about. All right. So in order to even be operating your reefer, that means that you have to have a certain type of motor truck cargo. All right. So what does a reefer truck have to have showing on their COI in order to even, be in a spot to move this stuff?
It needs to have reefer breakdown coverage.
Okay. What's that?
Yeah. Reefer breakdown coverage, basically, it's kind of one of those things like self-explanatory. It covers the cargo and even your reefer breaks down. Mm-hmm. Now, what I'm seeing a lot, because I'm noticing a lot of guys are starting to grab reefers, and, reefers are expensive, and a lot of guys, they go out, and when they start up, you're trying to keep your expenses as low as possible because you're a startup. They go out and buy an older reefer. Well, when you buy these older reefers, you have to get it serviced and maintenance immediately. You can't just throw it on the road. You want to put safeguards into place, like you want alarms put into the reefer. So if when you're driving your truck, if that reefer starts to get warm or colder than what it's supposed to, you can now turn around and make the necessary adjustments to the thermostat to decrease it, to increase or decrease the temperature. So what I'm seeing a lot of these days for my underwriters, they're asking specifically, how are they maintaining the reefer? What safeguards do they have in place? Do they have a system in place whereas if the reefer starts to break down, they can immediately get that that merchandise or that cargo transferred to a refrigerated warehouse so it can be stored until the reefer is serviced. And it can be picked back and reloaded and taken to its final destination. So I'm seeing that a lot because, and it's a direct result of these older reefers being on the market and being utilized.
Okay, yeah, that makes perfect sense. And you do have to have that service plan in there. Anything with the motor definitely has to have its regular servicing. So I can see why if people are skipping that, trying to save a buck, how that can hurt them in the long run. When it comes down to the seafood side of moving stuff in a reefer, do you have to have additional coverages just specifically for seafood?
Yes, you do.
Okay.
Yeah.
And
you have
what does
to
that look
notify.
like?
You need to notify. It's still reefer breakdown coverage. It's just that your insurance is going to be higher if you're hauling seafood than it would be if you were hauling produce. Okay. Seafood does tend to have a higher value, so you may have to have more than 100,000 in cargo. Your cargo may have to be up to 150. I have a client that does move a lot of seafood. He has $250,000 in cargo.
Wow.
Crab legs not cheap. So it's one of those things where you just have to make sure you're working with the broker, and if that's what you do for majority of your loads of seafood, then you know exactly what you need as far as cargo coverage, the limits of your cargo coverage in order to haul those loads.
Oh, yes, sir. Yes, sir. Okay. Yeah. Thank you so much for breaking that down for us. So when it comes down to another type of equipment, all right, so we talked about the coverage of, cargo. And then if you're operating a reefer, that's a specific type of cargo coverage you have to have, which is that reefer breakdown coverage. Now, what about other types of operations? Folks who only have power onlys, so in today's market, you could barely get a truck, and, with the trailer shortage, a lot of folks have to get their start by only operating as a power only. Now, what would you have to have in place in order to, just do the power only operation?
I'm happy you asked this question because this is one of those things where a lot of people don't understand what it takes to actually do power only. And when you're doing power only meaning you don't have a trailer, you have to make sure that you have the right coverage to cover the non-owned trailer that you are moving. Okay? When we're doing power only, what you need to make sure that you are talking to the broker and you're asking the broker, is this going to be moved under an interchange agreement? Or if you're non-owned, or if they'll accept non-owned physical damage. Okay? I see this all the time. And there is a big difference between non-owned physical damage and trailer interchange. Now, I tend to only use A+ rated carriers. I don't like using B+ or non-admitted carriers when I write coverage. So I can tell you guys now, I may not be the cheapest thing on the street, but you will be properly insured, right?
Mm-hmm.
So it's one of those things where it's tomato. Some people shop for rate, some people shop for coverage. When you come to me, I'm going to do my best to help you with rate and coverage. I want you to be in a sweet spot. I say that to say, when I'm talking to a client, you need to know what you're going to be having in place. Mm-hmm. Are you going to be operating under an interchange agreement? If you're operating under an interchange agreement, then trailer interchange coverage is enough. Mm-hmm. Okay? Because trailer interchange basically covers you to move a trailer that you don't own, that's operated by somebody else, or that's owned by somebody else, and you're going to be moving on their behalf. But trailer interchange coverage only covers you in the event that you have a trailer interchange agreement. Now, when you're working with a broker and they ask you if you have trailer interchange and it's your first time working with this broker and you say yes, make sure they send you a trailer interchange agreement. It's not something they just pulled offline, on a Google search and just sent you. It needs to specifically state your company, their company, who you're moving the load for, and all the necessary details, right? Why? Because if something happens to God forbid, or worst case scenario, something happens to that trailer and you do not have a trailer interchange agreement and you only have trailer interchange coverage, that claim will not be honored.
Okay? And who are they going to come for?
They're going to come for you. You're going to be on the hook for whatever the value of that trailer is. So if you have in possession a trailer that is valued at $40,000, you damage that trailer and it's a total loss, you now own a trailer you can't use. You own a ball. You own a ball of aluminum. The other thing you want to see is, and this is what I normally give my clients if they don't know what they're going to be operating under, is called non-owned physical damage. Okay. You can purchase $50,000 in non-owned physical damage as a separate line item. Typically, it's bundled together with whoever's going to write your collision and comprehensive coverage, if it's going to be separate from, or separate as a separate line item as part of your commercial package. And we're about to open up a whole other can of worms, but you can purchase that on your own. Now, what I tend to do for my clients is I educate them. I'm more of a consultant than insurance agent. I use a very strong consultative approach, and it's just how I've always been in life and as a banker when I worked in banking. Because prior to me being an insurance agent, I was a financial consultant or a financial advisor as well. So I talk to my clients. I find out what their growth needs, what their growth plans are, what they need to do, and things, what they're looking to do over the years, year 1, year 2, year 3. To make sure that whatever I'm offering you is works for your company and is going to allow you to grow properly. With that being said, I like to bundle the trailer interchange coverage with your cargo coverage. One of the carriers that I use, and if you're one of my clients and you're on this line, you've probably seen it on your COI. I like to use Liberty Mutual. Liberty Mutual is a mutual company. They're A+ rated. They cover all 50 states in the nation. And their rates for trailer interchange and cargo are extremely reasonable. Typically I can secure trailer interchange and motor truck cargo for less than $2,500. And that's with $50,000 in trailer interchange and $100,000 in cargo. For those of you that have trailer interchange, sometimes it's separate and you'll see your cargo may be $2,000 and your trailer interchange maybe another $1,500. That's a lot. So I try to bundle when I can. I try to bundle it together as much as possible to help my clients save. Okay.
So when it comes down to folks who are operating, having that power only, what other type of insurance do they have to have? Like what's Bobtail Insurance and how does that come into play?
So the guys that are doing power only, if you are doing power only, you have your own authority. You need your $1 million combined single limit to meet the broker requirements, the standard broker requirements. You need your general liability. And then, if you got to figure out if you're operating under an interchange agreement or not. And if so, you either need trailer interchange or non-owned physical damage coverage. For guys that are leased on to someone else's authority, meaning you don't have your own authority, but you're operating under someone else's name and someone else's motor carrier MC number, then those guys need what's called non-truckers liability coverage or Bobtail. Okay? Mm-hmm. Non-truckers liability coverage is, again, it can be a $1 million combined single limit policy, but it's only covering you in the event that you're moving your truck and you're off duty, meaning you don't have an active load. So you've dropped your load, you're off duty, you're done for the day, and you're going either back to the yard, you need to get, PMs done to your truck, whatever the case may be, but you are not on duty. You're no longer operating under under that motor carrier's authority. That's what that covers. So let's say it's a Saturday, you're off, but you know you need to get your truck washed. You want to get the truck detailed inside and out because you've been on the road for a month, and you know you're at that 15,000 mark, and you're getting your truck serviced at 15,000 miles. You're on the way. Let's say you're on the way to a TA to get it done, or you're a local mechanic to get it done, and you get into an accident. Someone hits you. That non-trucker's liability, because you weren't operating as a trucker, you're just driving your truck to get it done. Non-trucker's liability covers that.
Okay. Yeah, that makes perfect sense. Okay. So appreciate you breaking down that. I can the whole point, folks, is look, I can go in and ask a million questions about these specifics, but there's so much information that I don't want to get too far into the weeds. So I'm just going to throw this out there that Elisha is a great person to go ahead and follow and reach out to, and hit him up if you have any questions about what's been covered so far. But yeah, thank you for sharing that. And the fact is, you just mentioned something that kind of made me want to segue. You said, all right, running under someone's MC, like you've already done it. Now you're taking this load to the yard and, boom, something happens. But look, the fact that you said running under somebody's MC makes me want to talk about something that's very common in this industry, which is, you'll have somebody who already has their situation set up. They already have their company. They already have their MC, and they might have a contract or a way to get loads with various brokers. Well, I've experienced it where a person, an owner operator, will, run under that person's MC to get their feet wet, to make money on their own or something like that. They're not literally signed on, but they're using, somebody else's MC in order to get opportunities. Now, I'm not saying that's right or wrong. I mean, it happens. It's just a fact of the industry at this point. But I just want to talk about who's liable. So, like, let's just say I have my MC. I have, a relationship with this brokerage over here. Brokerage Atlanta Braves, because they won the World Series. Okay, so me and the Atlanta Braves, we move freight all day long. And then I have this other carrier, this other owner operator has their own truck. And, we're cool. I think that they're doing some good stuff, and I feel as though I'm in a spot to help them out. So they take a load for the Atlanta Braves, and, lo and behold, it's a reefer load, and they froze the stuff. They froze it. Okay. Who's liable? Is it the person who actually is operating the truck that, didn't do what they were supposed to do, or they messed up, or, the damage happened to the product? Or is it the MC holder? Who's liable?
Okay. So, loaded question.
Yes. All right. Look, let's not say the reefer breakdown. Let's just say
no.
Okay.
Scenario, but it's like they're like, I want to say probably 5 to 10 different things that goes into this, right?
Okay.
And a lot of guys think it's as easy as, add this person to my insurance. He's going to work under me. I already have cargo insurance, and they just need Bobtail. Get Bobtail. Add me to their Bobtail policy as an additional insured, and let's go.
Mm-hmm.
And I'm seeing this a lot. I'm seeing it a lot, especially with the social media warriors, telling you don't need a truck to be a motor carrier. You could be a non-asset based carrier. Non-asset based carrier. That's like, okay, good.
Mm-hmm.
Say that to let the vets do that.
Okay.
You're a rookie. You're coming into the gate. You haven't even gotten your feet wet yet. Learn the game first.
Mm-hmm.
Learn the game first. No reason why somebody should be coming into the gate trying to activate their authority as a non-asset based carrier. You don't know what the hell you're doing yet.
Mm-hmm.
And I'm gonna just throw that out there. And
okay.
Bring it back and then put my corporate hat back on. Okay. So, when you are operating under someone's authority, make sure that person is giving you a lease agreement. That lease agreement needs to be tight. You want to read through it and you want to figure out, or you want to read through it and you want to make sure that any event something happens, Because remember, you're running under their motor carrier authority with the FMCSA. You're running under their insurance. You're running under their US DOT number. So when you're doing this, if you have any form of stickers or whatever the case may be on your truck, they have to come off. And you have to put the person's authority you're running under on your truck.
Wow. Okay. So boom, right there already.
Yeah, because you're running under their MC. I see this all the time where somebody's like, yo, I got a contract. I need more trucks. Bring me your truck. And the two of them have an active authority. It's like, you cannot do that. That's double indemnifying. You cannot be a motor carrier running under someone else's MC. Can't happen.
Wow. Okay.
And if anyone doesn't know what double indemnify means, that's double insurance. Okay. In order to be a motor carrier in the world of the FMCSA, because when you own a trucking company, you are essentially a motor carrier. That's what your MC number stands for. Your motor carrier number. You have to have an active insurance policy on file with the FMCSA. Okay? So if you have a MCS 90 in your possession, a BMC 91X in your possession, and you have an MCS 150 on file with the FMCSA that's active and it says that you can hold certain commodities, you are a motor carrier. Okay? You cannot say, John cannot say, yo, Mr. Smith, I have a contract. I need more trucks. Can you come over here and work under my authority? You cannot, as a motor carrier, go over there and work under their authority. The both of you have insurance. And what's going to happen is, any event something happens, your insurance and his insurance are going to battle it out. And they're going to say, we're not covering anything because he was not supposed to be leased onto your authority as a motor carrier. He has his own insurance. He is a motor carrier.
Okay.
So, I see this all too often. I get these questions all the time. You know, can I just drop my insurance to $750 to keep my authority active, and I'm going to run under my friend's authority while my authority seasons? No, you cannot. Can't do it.
Okay.
I see it all the time.
Okay.
Now, when you are a motor carrier and you allow somebody to run under your authority, any and everything they do, you're liable for. So if they tear up somebody's cargo, that's a claim on your insurance. If they go out there and hit somebody, that's a claim on your insurance. If they get put out of service because they have raggedy equipment, that's on your ISS scores. That stays on your safer records. That's your insurance is going to increase as a result of that person, because as a result of that person's negligence. If they get into an accident that's not at fault, again, they get into an accident that's not at fault, even though they're leased onto your authority. When you go to renew your insurance the next year, your insurance will increase as a result of that accident, even though you were not at fault, as a result of what that person did under your motor carrier or under your authority.
Okay. So look, let me.
It's a lot more to it than just run under my authority and go.
Right, because I'm a simplify in the sense of where I was coming from with the question, but I'm so happy that you went into all of that, because I didn't think about it, or I wasn't approaching it from the standpoint of somebody else having their own MC. I was literally approaching it as somebody who is new or don't have that situation already. They might have their own insurance as far as automobile liability, but maybe not cargo, or maybe nothing else, more so just to protect their truck, but not cargo itself. So in that sense, you kind of answer the question that if anything happens while they're running under your MC. Well, how about this? Let's take it back one step. What if there's no agreement? What if there's no, lease agreement between the motor carrier and the person that is operating a truck under that person's, situation? I'm asking that specifically because I think that's what's happening more often than not. You know what I mean? There is no agreement.
Depending on the severity of the claim, you run a risk of being 100% liable for whatever took place.
Mm.
And it's one of those things where it could be considered gross negligence. And if it is gross negligence, your insurance is not going to cover that. You gotta have your paperwork in order. You gotta have your house in order before you can go outside.
Yeah, true.
Just to say that, you know.
Yes, sir.
One of the most important things in this industry is compliance, and I can speak from experience. You know, I don't know if anybody looked at my bio, but I also own Northern Atlantic Logistics. Run my DOT. It's on there. It's on my bio. You can see, I you know, I'm not going to sugarcoat it. I have one truck. I have one driver. You know, we're running intermodal, and the goal for me is to shoot up to 100 in 10 years. That's my goal. But one of the first things I did is, activated my authority. Once I activated my authority, I made sure I had the necessary insurance in place in order to access the ports. But before I even put my truck on the road, my truck's set. Yeah.
I mean, we want to get there. Yeah, okay.
We'll get there. We'll get
right.
there. But before I even put my truck on the road, I let everything sit. And some people may not have this ability to do this, to let your truck sit for a couple months while you get everything ramped up. But one of the things I made sure of is I wanted to make sure that my house is in order before I put my truck on the road. So I talked to, my expertise is insurance. It's not compliance. So I talked to compliance officers, and I hired one. That I felt as though I was comfortable with, extremely knowledgeable. And some of you guys may even know her. It's Kelsey Taylor Scott from Legacy Trucking Consulting. So she is my compliance officer.
We definitely support Kelsey.
Yeah, great people. And, hopefully I'll have the pleasure of meeting her on Friday when I fly into Atlanta for the conference. So I made sure that before I did anything, I talked to Kelsey. We did multiple consultation calls. She put together all of my back office books and everything to make sure I had employee handbooks, pre-trip inspection checklists. I knew how to manage, teach the driver how to manage ELD. It was just a whole bunch. I was, drug consortium, all of that stuff. And I've been approached by multiple people saying, "Hey, can I run to your authority?" No, you cannot.
No, thank you.
Now, will I make more money if I allow somebody to run into my authority? Of course, you can do a 70-30 split. But I'm still learning the industry as a motor carrier. I can come on here and tell you, I don't know it as a motor carrier. I know it as an insurance agent. So as I learn the industry as a motor carrier, once I fully understand the industry as a motor carrier, because there's a lot of little nuances that I didn't anticipate, as being a motor carrier. Once I learn it as a motor carrier, and I get a couple years under my belt, then yes, I'll let somebody run under my authority. But I need to make sure that I have all the systems in place to manage an owner-operator properly, so they're not just on the road being a cowboy and bouncing off walls.
Okay.
Yeah.
All right. Well, look,
I know that we don't. Example. Let me give you a real life example real quick. I have an insured that's on my books right now who leased someone onto the authority, and that individual has gotten into 2 accidents in the first year of them being in business. What they don't know is I'm actually going to send them, because they're a non-asset-based carrier. Unfortunately, when it comes down to renew, I'm going to send them a notification to let them know that I will no longer represent them as the insurance agent because of this. Yeah, because I can tell that they are not keeping their back office. If this person's gotten into 2 accidents already, they probably didn't road test this person. They probably didn't interview this person properly. And more than likely, they don't have their back office in order.
I got you. Okay. So, that's interesting because, a lot of people, a lot of dispatchers are interested in becoming, getting their own insurance so that they can get opportunities and put on carriers, kind of like sign them on to their situations. But, what you just said, it can come back and get you. And it's not like you could just drop the MC, apply for a new one, and it's not going to catch up. I mean, because they're going to find out eventually. I mean, that's just how it goes.
Yeah. Yeah.
Yeah. Okay.
And for those of you that have brokerage or you're a broker, a freight broker, and you're looking to transition into the to being a motor carrier, um, you have to find an agent that has access to a market where they'll allow you to do both. Because a lot of these markets don't let you do both. And unfortunately, I don't have a market that will.
I got
Yeah.
you. Okay. Well, look, I know there's a couple things that I want to hit on before we left, because I know that you have some things to do this evening.
I can go to 8:15 if
Okay.
necessary. Yeah.
Okay. Well, cool. Look, there was something that real quick. All right. A COI requires, it doesn't require, but a COI has this nice little space that's, it's a box and it says certificate holder. All right.
Mm-hmm.
And most times when you're booking a load with a brokerage, they request that their information, their company name, their mailing address, maybe even a phone number, be listed into that box as a certificate holder. Can you talk about that and why a broker would want to do that?
So with with a certificate holder, it basically is an entity that has provided a certificate of insurance as evidence of the insurance maintained by another entity. That's really all it is.
Mm-hmm.
So they just want to make sure that they're verifying that you have the necessary insurance requirements in order to pull that load. Every broker and shipper is going to have different requirements. A lot of it's standard, unless you're doing hazmat, heavyweight, or something off the wall. But as a cert holder, they just want the cert holder is someone that was issued a certificate of insurance detailing everything that you have on your commercial insurance package. The additional insured is where it gets a little funny. So depending on additional insureds or waiver of subrogation, and this is where it gets real technical. When you have brokers saying, we need to be added as an additional insured and waiver of subrogation, stuff like that, then you need to make sure you're you're working with your insurance agent to make sure that you have these endorsements on your insurance policy to provide the necessary additional insureds or the certificate of insurance to that individual. So, case in point is additional insured would be like the lien holder for your truck if you have a lien on your truck, or if you're leasing your equipment. Those individuals are added as additional insured because any event something happens, they need to make the lien holder whole first, or indemnify the lien holder first before they actually indemnify you or make you whole.
Gotcha. Okay. Yeah, so I was under the impression, so that's why I'm happy I even asked the question. I was under the impression that was something that was being requested just because any company that's listed in that box is therefore indemnified from anything that takes place. Is that the case, or is that like one of those misconceptions?
It's a misconception.
Okay.
Now, if you have someone's cargo in your possession, or if you're leasing someone's equipment and it's in your possession and something happens, then that person, it will be indemnified. They'll have the ability to file a claim against you because you do have it in their possession. But sometimes we have sometimes you guys are setting up carrier packets and you may not ever do business with that person, and you're naming somebody just as a certificate holder, and it's basically saying that they have been provided with a certificate of insurance showing that you have what the details are of your commercial insurance package.
Okay. To be honest, man, look, I'm happy to be asking this question because I thought it was just for indemnification purposes, and that was the reason why they wanted it. And so look,
you need to make sure you have insurance, so in the event something happens, they can file a claim against you and be indemnified.
Okay,
but you may never run with that person, so it's just the COI.
All right. So look, sometimes look, I'm gonna say this on air because, hey, bro, as a dispatcher, sometimes I be moving and I need to get these COIs quick. What difference does it make if it doesn't indemnify the brokerage if I get it from my insurance agent versus I use my PDF editor and put their name in there? What's the difference?
Yikes.
I'm just saying. I mean, and here's the thing. I've actually, talked to my wife about this, just like, man, they're just taking so long to get this thing back over to me. I might lose this load opportunity because I'm trying to set this carrier packet up and do all these things in order to put myself in a position to get a load. And, the reason why, I mean, I like to do things by the book. I'm a rule follower for the most part. I'll wait that time, but I do have the ability to do it. So it's just like, what's the, if it's not protecting the brokerage, what is it, doing,
So so it's one of those things where if you have a certificate of insurance, or let's say you request a COI from the motor carrier and they're taking too long to get it back, and a claim does arise, and the agent's going, well, who is this broker? Who's the shipper? The agent it could potentially raise a lot of red flags for the insurance agent if they don't have a copy of this certificate of insurance made out to an individual in their system. So in my CRM, I keep track of every COI that was ever sent out.
Right. We've talked about this.
Yeah, it literally keeps track of a list. It could be like 30 sometimes of different individuals that request a COI. A lot of brokers use RMIS to keep track of, and there's a couple other systems they use as well. But they use RMIS. So if you're one of those brokers that use RMIS and you subscribe to that, then you can have the ability to go in and just pull the COI out of the system. That's fine.
True. Yeah, that's okay. They say that. They say, hey, we already have this on file with Assure Assist. And folks, for those who are listening that don't know what RMIS is, it's just one of those. It's one of the best things I tell you when it comes to getting onboarded with a brokerage. The fact that you can do and submit all of this stuff online versus having to get a PDF packet, print it out, read it all the way through, physically sign every page, and then scan it back to yourself to then send back to the brokerage. The fact that it's just so seamless and online, oh man, it just makes things so much smoother. So thank you, RMIS. I really do appreciate you. So now I understand that part. Okay. And, we don't have to go into the weeds of it, to be honest, but that was, like I said, that was my misconception, brother, was just that having that certificate holder was them being indemnified and basically saying, hey, if anything happens, no, we're not liable at all. So that's what I thought that was.
Okay.
All right. So look, it's something else that has to do with the actual COI, and I think that this is it's just something that's hit or miss. What's the deal with workers' compensation? You know what I mean? It's just like every single one of those brokers are going to ask you, do you have workers' compensation? And then I guess it just comes down to whether or not the state that you're operating, like you formed your company in, requires it. Is that the case?
Yeah. So you got to look at your state requirements when it comes down to workman's comp. For guys that are owner operators, meaning you might have your own motor carrier authority. You have your own motor carrier authority. In addition to, I'm sorry, I'm getting text messages at the same time, and it's I don't know if you guys can still can you guys hear me clearly?
Yeah, you do your thing, brother.
Sorry. So it's one of those things where if you, I'm sorry, I done lost my train of thought. What was the question, Jerry?
Yeah, no doubt, brother, about workers' compensation, and it comes down to the state requirements.
Got it. Yeah, so every state is different. Every state has their own workman's comp requirements. If you own your truck, and you have your own motor carrier, and you don't have any employees working for you, then you don't need workman's comp. It's your truck, you're the motor carrier, you're good to go. If you put somebody in your truck, they don't own the truck, they're not responsible for maintenance, they're not responsible for fuel, technically that person's an employee. They shouldn't be on a 1099, they should be on a W-2. You have to, you got to look at your state laws and figure out if you need to maintain workman's comp or workers' comp. Okay. Some states say if you have less than 5, you don't need it. Some states say if you have 1, like Jersey, I'm in Jersey. Jersey is if you have 1 person, 1 employee, you have to have workman's comp. Now, loaded question, Joy. If you are found that the individuals that are working with you are actually employees and not independent contractors, based on the way the law is written in your state, and you are not maintaining workman's comp, you are not paying into payroll taxes, things of that nature, the audit and the penalties for that are more severe than it is with the federal government.
Oh, wow.
Okay? They will come after you and throw the book at you.
Oh, they want that money.
You think they won't? They will know by the time. My wife is a CPA. I'm going to throw this out there. My wife is a CPA. She's one of the best in the country, and I'm not just saying that to say it's my wife. My wife was nominated 40 under 40, meaning she's top 40 CPAs in the country under the age of 40.
Okay.
I have literally had New Jersey state officers walk into my office in plain clothes. They look like a bum, but when they open up that briefcase, they know everything about you. Down to the penny of what's in your bank account. And when they show up, they're not showing up to inquire. They're showing up to leverage. They are going to levy everything you have and then say, we'll give it back. So, again, I see it all the time. Guys are hiring people to work to work with them. They're in their truck. They're not responsible for maintenance. They're not responsible for fuel. They're not responsible for anything when it comes down to the expenses, and they also force dispatch. I mean, they can't refuse loads. Those are employees. They're not independent contractors. They should not and cannot be on the 1099. They have to be on the W-2.
I got you. Okay. Well, yeah, appreciate you answering that, because I wasn't thinking it was going to be that detailed, to be honest. Like the majority of the carriers that I dispatch for, they might have, they're smaller operations for the most part. I do have a huge carrier that has hella trucks, but I think that they even operate differently than some of the mom and pop shops that I dispatch for. You know what I mean? Yeah. So, okay. Yeah. So that's good to know for folks who are about to start scaling and, made that money, about to start bringing on or start purchasing more equipment, and you got to have people to operate it. That's great to know. Thank you for sharing that, brother.
You're welcome. And I say that to say, I know we a lot of us are small business owners. I still consider myself to be a small business owner as well. It's one of those things where everybody wants to keep their overhead low, but it's either you pay for it now or you pay for it later. And a lot of times when you have to pay for it later, the cost or the expense is 10 times greater than if you just did the right thing on the front end.
Yes, sir.
To get workman's comp is not cheap. I am not going to say workman's comp is cheap. Workman's comp is not cheap. Okay? But price out the workman's comp versus, what it is that you're getting on your loads. And if you feel as though workman's comp may be expensive, then don't take cheap freight. Be selective on what you take. Don't take the cheap freight. Know what your break-even point is. Don't take cheap freight. And know what your break-even point is per mile. Okay? Also, a lot of the drivers out here are being offered positions, and they're not giving them health insurance. To offer a driver health insurance, it may cost you as a motor carrier $500 a month, $400 a month, because you don't have to cover the whole family. Cover the driver. How can a driver stay healthy and maintain his medical clearance card if he doesn't have insurance?
Correct.
Now, some drivers may have insurance elsewhere. Some don't. And if your driver does not have insurance elsewhere, talk to your agent. There are guys that are all over Clubhouse, like the health unicorn Mike. I see him all over the place. Great guy. He actually went to college with my sister, and I don't know him personally. I actually met him online, and it turns out that he actually knew my baby sister because they both went to Norfolk State together, and they actually know each other personally. Just pure coincidence. But the guy is very knowledgeable. Talk to him and find out what it is, what it costs to offer your employees health benefits. And you'll realize if you split the cost with the employee and you, it's not that expensive. It's not that expensive. Some of us spend $400 a month on Uber Eats. It's not that expensive.
I hear you. I mean, to be honest, I know some folks that offer insurance or some services. Even Kelsey put me on to someone who basically says that they can offer insurance to drivers at no cost to the carrier. So it's those are opportunities out there. So speak with Unicorn Mike or hit me up, because I definitely talked to Erica, and she's real smooth. She'll quote you out real quick, and you'll be able to get that taken care of. Okay, so yeah.
My only thing is just make sure you're purchasing, if you're buying an actual health insurance policy and not one of those discount programs. There's a big difference.
Okay. Yeah. Okay. So I appreciate that. I did have one last question for you. I guess two. I'm going to talk about this one first, and then we're going to transition to some tips on lowering your insurance premiums. We're actually going to have a special guest join us on stage for that part. So my last question for you is, you kind of alluded to the fact that, you had to find out how to get to the freight on the ports. I mean, you've heard how backed up ports were. That's an endless supply of work. And, once you're in the system as someone who can do port work, you don't have to go look for freight. They're going to come find you.
Yes, they are.
How'd you do that? Tell the folks.
So before I actually started Northern Atlantic Logistics, I actually was I'm actually registered with the UIIA as an insurance agent, one of the premier insurance agents that can actually offers the necessary coverage for you to access the ports. Because a lot of people don't realize, in order to access the ports, you have to have what's called a UIIE1 endorsement. Okay? And that basically says that you have the necessary requirements to access the ports. You're in compliance with the UIIA, and you also have what's called hired and non-owned autos, or any autos on your insurance policy. It does cost a little more. For those of you that are brand new to the industry and you're trying to access the ports, your premiums are going to be higher than someone that's been in the game for at least a year. Okay?
My bad, bro. Not to cut you off. Let me ask this. Do you have like a price range? Because even with me, like, I talk to so many amazing people who do port work and who do rail yard work. Like, I talk to Christy all the time. Like, everybody knows Christy, but she's in the audience right there.
Christy's a beast. She's a wealth of knowledge. Yeah.
Right. We're actually going to have Christy and Jamira on, at a future date to talk about drayage and all this type of good stuff. But, after talking to these women, I'm just like, I need to put more people on to, being able to access the ports. But, I don't have a price point to really say, well, it's more expensive, but this is it. Do you?
It all depends.
Okay.
And for a guy starting out the gate, and it also depends on what state you're in. Rates vary per state. So a guy starting out the gate, if you're trying to access the port, it could range between $26,000 to $30,000. Okay, depending on what state you're in, per year per truck. Coming out the gate, if you wait a year, then you could probably get it down to about $18,000 to $20,000.
Okay,
depending on just make the sacrifice, do long haul for a year, and go that route. Canal just opened it up, and this is unheard of, but Canal just opened up their freshman program in Virginia, North Carolina, South Carolina, Georgia, and Alabama, and Florida, where if you're a brand new motor carrier, you're first coming out the gate, they will give you the UIIE1 endorsement so you can access the ports. They just did it. It's fresh. Hit the market about 2 months ago. Okay?
Hold on. My bad. Did you just say that there's an organization named Canal that
Canal's an insurance carrier. They're based out of South Carolina.
Uh-huh.
Yeah, A minus rated right now.
Canal is just handing this out to new carriers?
Yes. Yeah.
Okay. Why do you think that is?
Congestion. Port congestion.
That's kind of them.
They're everybody's trying to figure out a way to quell this port congestion. And to be honest with you, if we have more guys that have the necessary insurance requirements, we can attack the ports. For all of you that have Progressive, I'm sorry, you can't access the ports. Progressive does not give you the necessary coverage to do it. You have to switch your insurance, and it's the only time you can do what's called a midterm change, meaning you can switch your insurance in the middle of a policy to access the ports. So if you have Progressive and you want to access the ports, call your agent, figure out what you need to do. Because there is some back office work that you have to do as far as updating your MCS 150 to check off intermodal containers on your safer records, and then we can do a midterm change to get you to the ports. The other thing is, because Progressive is like one of the largest carriers for startups. A lot of these guys, they just don't have the insurance requirements, and realistically, in my opinion, in my professional opinion, that's one of the reasons why we have so much port congestion. It's not that we don't have the trucks to move them; it's because the truckers don't have the insurance to move it.
Got you. Okay, that's an interesting twist on it. I've never thought about it like that.
Yeah, and then you also got to and there's bidding that you have to understand how to bid. I've actually offered to pay Christy to teach me how to bid.
No.
If I ever had somebody to help me, I don't come with can you do me a favor? I come with my checkbook in hand. And that's just the way everybody should be, because I want to make sure I pay for your time.
Yes, sir. Yes, sir. Hey, man, I think about 30 people just snapped in the audience. They gave you 2 snaps. Everybody in this audience, business owners, entrepreneurs, folks who are, really looking to build their family legacy. So I think that just having that understanding is, that's just natural with people who are doing that. Time is not free. Time is not free.
It's not. It's not. Yeah. And one of the things that, because there are some people that are on here that have been around, they've been in business for a couple of years. They have a great fleet. A great fleet, and they've been running their business properly. There are other programs out there that will give you access to the ports, keep your insurance very reasonable, and at the end of the year, you maybe even be able to get some of your premium back. And that's when you start to you get yourself hooked up with a captive program, which I believe Will is actually going to talk more about, because a lot of these guys, they don't know about captives. It's one of those things where you got to know the right people in order to access them.
Yes, sir.
Yeah, and I'm gonna be. I'll be honest with you. I've been looking for a good captive program to offer to my clients. On Friday, Will and I will meet for the first time face to face, and we're going to talk more about the captive program that he has to offer, and how myself and a couple other agents that I have in my network. For those of you who don't know, I'm a mentor. I teach a lot of individuals how.
Looks like Elisha just got a phone call, but I know that he's going to come back in a second.
I'm sorry. Go ahead, that was my mom. I'll call her. I'm the only boy, so I'm my mama's boy.
I hear you, brother.
In my family.
Definitely
I got 2 sisters. What was I saying? So there's a way for guys to access the ports, keep your insurance premiums down, but at the same time, at the end of the term, you may be able to get some of your premium back if you don't have any claims. And, I've been looking for a great captive program to offer my clients that have 10 or more trucks, or, they have over $100,000 in premium that they're spending. And they're just looking for a way to just save, try to save and cut down, because, it could get pricey.
Yes, sir. Yes, sir. So I appreciate you being able to give us a nice little segue. But guys, I know that Brother Elisha is going to be heading out soon, but I just want you to know you can always click on his profile, and message him in here. But I think that the preference would be to either send him a direct email or go to his Instagram and send him a direct message there. What's your preferred way, folks, to reach out to you? Let me just ask you.
You could shoot me an email. If you go on my website, my email address is there. You could DM me, or you could back channel me. I try to keep up with my social media as much as possible, but I am, a lot of my clients will tell you I'm very busy. I try to get back to you as soon as possible. But I'm a type of individual. I work on referrals. I don't advertise. Okay. So, and I purposely don't advertise because I have more work than I can handle as it is. And if I start advertising, I'll just be inundated with, people, and it'll just create a poor customer service experience, for everyone. So, reach out to me via my website. You could go to thetruckersinsurance.com. You can go to the aceinsuranceagency.com. I have a link tree on my profile, so you can click the link tree. You can schedule a consultation with me, or via my link tree. And you can also inbox me or back channel me. And I'm more than happy to have a conversation with anyone. One of the things I did bring up is the fact that I do mentor in the insurance industry. The reason I do this is because, as a culture, African Americans, we only represent 0.8% of the insurance industry as agency owners. And I'm not talking about the guys running around selling Primerica, and all these multi-level marketing. To me, they don't own agencies. I'm talking about an individual that actually owns a brick and mortar insurance agency. We represent 0.8% of the market. It's less than 1%. So what I do is, and I don't charge for this, I have about 5 ladies that work under me right now. I have a kid that I pulled right off the street. He's going to be starting on Monday, on November 8th. He's coming in. I'm paying him $20 an hour. He just has no experience in the insurance industry. He wasn't even looking for a job. He was on unemployment. I grabbed him off the street, and I'm going to train him to be an insurance agent. And hopefully one day he will be motivated enough to open up his own agency, and I'll help him do that as well. But guys, we need more of us in the industry. It has to happen. This is a $1.1 trillion industry. The insurance industry is, I can't even think about how much money there is to be made in this industry. When I worked for someone, I worked for JP Morgan, I was lucky if I broke $70,000 a year. As of July, I made over $100,000 in July. Get into the insurance game.
Get into the insurance game.
I do not charge for this. I do this as a labor of love. You don't have to go out here and be working for other people in order to do this.
All right. Hey, okay? Man. Yes, sir.
Listen, Jury, that's my time. It's 8:15. Honestly, I'm getting ready. I'm actually getting prepared to fly down there on Friday morning for the Leading Ladies in Logistics Conference. So if anybody's in the Atlanta area, DM me, back channel me. I'll be down there Friday and Saturday for the conference. Okay?
All right. Well, look, brother, I truly appreciate you for making yourself available this evening and sharing all these all of this insight on commercial trucking and insurance. We truly appreciate it, and I just want to say thank you, man. I look forward to seeing you again. So all of us on the stage are going to be at that event. So I'm pretty sure that we're going to be connecting there as well. So thank you again for your time, brother. And from here, we're just going to transition, man. Thank you for Thank you. That's all I got.
You're welcome. You're welcome. All right, guys. Have a good evening. And for those of you that will be in the Atlanta area, I'll see you in Atlanta.
All right, brother. You have a great evening as well.
You too.
All right. So, Will, what's up, man? How you feeling?
Oh, I'm doing good, man. Doing good.
Hey, thank you so much for hanging out with us and, making yourself available to, educate people on what a captive is, because Elisha touched on it very, very lightly. But this right here, this is you. This is your baby. This is your game. And, if you could, tell people, what is it that you're doing with the captive? What is the captive?
Yeah, no, for sure. And I'll start really by saying, and I say this phrase a lot, but I can't I can't emphasize it enough. But if you know the rules of the game you're playing, you can typically play that game to your advantage. And I
sir.
say that in regards to anything, but specifically within the insurance industry. Everybody hates insurance. You're paying a lot for it. Most people aren't having to file claims. It just becomes a sunk cost that you're having to pay, and you're really not using, and that's frustrating because you can see what it's taken off your bottom line. And I get that. I'm in the industry, but I still understand that. So the captive, just like y'all alluded to, the definition side of, hey, what is a captive or a captive strategy? It's simply where a group of business owners come together to form their own private insurance company. Now that sounds a lot more in depth than it really is. Really, in the basic terms, it's just a strategy that can significantly lower your insurance costs by really only making you pay for the insurance you're using. Because really what it is, I know everybody knows that the insurance company makes money off of you, but they're making a lot more money off of you, off of businesses than these businesses and business owners realize. Just because of how insurance is structured. And so real quick to explain that, I'm gonna keep it high level. I'm not gonna get too into the weeds, but really I'll explain kind of two ways that kind of more so what a captive is, but two specific ways of how a captive specifically saves you money, by first explaining how your standard insurance company works. So Elisha, he deals a lot with, and I have an agency as well, but I specialize really in these alternative opportunities, these alternative programs. So I'll refer to standard insurance versus the captive. That's kind of when I throw those words around, I'm just meaning, hey, your typical policy you have is your standard insurance. The captive is this special thing I'm talking about. But so how your premium is calculated in the standard insurance, it's a lot of factors, but it's really three main factors. And what those are is your business's loss history. So how many losses have you had over the last few, 3 to 5 years? The trucking industry's loss history. So how bad has the trucking industry as a whole performed over the last 3 to 5 years? And then the insurance carrier is always going to throw in some extra money in there to make sure that they're making a profit. So that's really, and from the 30,000 foot view, those are really the three biggest factors in how they're coming up with your premium every year. So the first point with that I'll make is that these trucking businesses that aren't operating safely and that are having and causing all these losses because the trucking industry has claims. They have really expensive claims, but not everybody does. But these companies who are causing these claims, they're making your premium higher than it should be, because they're affecting your premium. Because again, remember, one of those three factors is that the trucking industry as a whole affects your premium. So, and really, if you look at it, two of those three factors you have no control over. Which is, again, I'll tie that back here in just a second, why and how the captive works the best. But this second thing is the premium that your standard insurance company charges. I'm going to use $100,000 as an example. So, because it's just an easy number. 30% of that money pays for the insurance company's fixed costs. It pays for the commercials they're seeing. It pays for their offices, their employees, all their fixed expenses. That's what 30% of your premium goes to pay for. Well, the other 70% goes to sit in what's called a loss fund. And that's exactly what it sounds like. It's simply a fund they have that's going to pay for any of the losses that you have. They expect you to have a certain amount of losses every year. Remember that. So that 70% is just kind of what they're expecting. It's really a little bit overinflated because remember their profit is backed into there as well, but they have 70% of your premium sitting over there to pay for your losses. So when you're not using that 70% every year, the insurance company says thank you, and they put that as extra profit in their pocket. So that's really the big issue of why a captive type program exists, is because instead of the insurance company getting that 70% and keeping it, what a captive program does is that it gives you a very large portion of that 70% back. So it's lowering your overall insurance costs by giving you large dividends back every year.
Okay. All right. All right. Well, yeah, I definitely appreciate you giving that explanation. And so, guys, I'm not going to lie to you. Will and I was talking about this at least a month and a half ago. And, I was just like, man, this sounds just too good to be true. So, he humored me and gave me the information to kind of back it up. So after that, I was like, well, the folks need to know about this because it sounds too good to be true. The fact that you can pay into a service where you're becoming an owner of that service and then, be able to limit the amount of, money that you're throwing away on something that you got to have anyway. Like you have to have insurance. Like as you've heard throughout this entire discussion tonight, you have to have the insurance to play the game. So with this, a captive, it gives you the ability to potentially, most likely, see some return on that money versus of it just being a sunk cost. And how'd you find these rules out, brother? Like, how'd you find this out?
So, I'll make long story short. This is not a new thing. It's been around since the 70s. The first group captive was formed in the 70s. But it's kind of a secret, if you will. And what I say that because it's only the very, very large companies are using this, but they're not telling anybody else about it. That's why most people don't hear about it. So I have my own agency now, but early on I worked at a large regional brokerage that dealt with very large clients. And that's where I really learned the ins and outs of this strategy. And so fast forward to where we're at now, I said, hey, I don't deal with as big a clients anymore. I deal with small businesses. And, I just said, hey, the biggest complaint from all my clients was, Will, our premiums are going up every year, but we're not having the losses to justify those premium increases. And this captive strategy is exactly that. That's the solution for that problem, is that it really makes it. I grew up playing sports, and so I use the analogy. It's the give me the ball in the fourth quarter mentality of going, hey, I want to live and die on my insurance premiums by what I do, not by what, all the jokers out there in the industry that may not be operating the same way I run my business do. So that's how I first, I just took hold of that strategy because I said, hey, as a business owner, I would do this 10 times out of 10. And so I really just dug into it and dug into the details. So we have not done anything different other than we've made this strategy available to much smaller businesses than it's typically been available to.
Oh, sorry about that. I was muted. I was saying, who would you say is the most ideal type of operation to be a part of this program, or the captive? Like what type of company? How many trucks? And who are you really targeting to be a part of this?
Yeah, so it's above average business owners as far as when I say really how they run their business, but really from the loss perspective, from the insurance perspective, you do have to have a certain size. Typically, you have to be paying $500,000 plus in the kind of the standard market for captives. Those ones that I talked about, the really large companies, that's why you hadn't heard of it. You have to be paying a lot more. We've lowered it to really the $75,000 mark. Now, I'll give you the caveat. If you're below that, we have an agency that we can groom you to be ready to move into this program when you get big enough. The reason the size comes into play is because it's really a feasibility issue. You have to be paying. You have to be paying enough to where the juice is worth the squeeze, if that makes sense. Because a captive program to your standard insurance program, I'll explain it like this: a captive program is like buying a house. and a standard insurance program is like just going and renting somewhere. So what I mean by that is there's some cost up front on a captive program. It's a long-term investment, and I mean long-term meaning more than just one policy period, but it does take a little bit more. It's not just going out and getting a policy. So that's where that size comes in, is you have to be paying enough to where the investment, so to speak, actually just the numbers make sense for you to do. So typically it's not necessarily a fleet size, it's more a premium size, but and depending on the state, every state's different. We're in Texas, so it could be 5 or 6 trucks to get you to that 75. I know states where it's 3 trucks that get you to that 75. So it's really for if you're paying 75 to 100 plus in insurance, and you're above average on your loss history. So what that means is we have to protect the group. The group captive, that's your rates are just based off of the group instead of the whole industry. So because of that, we have to make sure that group continues to perform well. So that's where the loss history kind of requirements come in.
Okay, yeah, that makes perfect sense, because when it comes down to it, if the same way that you were describing the history of all the other folks who are insured by the insurance company, and how their performance actually is directly correlated to how much I'm having to pay. It's the same situation here, right? And that's the reason why you have to make sure that you have some pretty high performing carriers.
It's exactly it. Your insurance in itself is just a group that shares a risk, right? So when you're in the standard market, you are sharing the risk with the whole market. Basically, the whole trucking industry, you're sharing the risk. That's why they're impacting your premium. With the captive, you're swimming in a cleaner pool, so to speak. You're only sharing risk with these very high-performing companies. So therefore, when the insurance company looks at it, this captive group isn't having as many losses, therefore they don't have to charge as much premium. So it helps your premium instead of going up every year like everybody sees. And frankly, as a side note, we're probably going to see it continue to skyrocket premium, because with all the with the shortages we're having driver wise, and then them encouraging a lot of drivers to get into the industry quickly, that's naturally just going to make claims go up. And when claims go up, the cost goes up for everybody. So I say that to say standard insurance, your premiums are always going up and to the right. They're just always increasing, really, no matter if you're having losses or not. In a captive, they actually start to level off, and actually your premiums begin to decrease every year. That's before you even get your dividend back. That's just because, again, that premium, the rate, basically the premium the insurance company needs to cover their costs and to cover all the losses is naturally going to be a lot lower when there's a lot less losses that happens in the captive.
Yes, sir. Okay. Well, I do know that, we're going to be having this conversation a little bit more in depth in the near future. I definitely wanted to use today and this opportunity to get people, just hearing about it, because it's new, or it's new to us, new to most people, but it's definitely something that's worth taking a look-see. So was there anything that you wanted to say specifically before we opened the floor for questions?
No, I would just say that exactly like what you said, man. We are, because it's one of those things, just like when you and I talked, it's new. And so naturally people tend to be, if it sounds too good to be true, it probably is, right? That's the typical. And frankly, I'd tell you the exact same thing. That's how I would think too. So what we're doing is we're really getting the industry, we're making this known to the industry and to the smaller companies within the industry. If you go to a lot of these large companies, they're already doing it. You just don't know. Frankly, the standard market, you're in these types of strategies behind the veil of the insurance company. It's just you're not getting the benefit from it because it's behind the veil of the insurance carrier, so they're still getting all the benefit from it. So, so about 60% of insureds are already in this strategy. It's just they're not even seeing the benefit from it. So it really comes down to That's really all I want to say is we're getting the word out. The trucking industry is actually the perfect industry for this type of program. The fronting carriers we work with love it. Again, as long as everybody's meeting the loss ratios and things like that, it's actually the perfect industry to do it in. But that's all I have to say. And we can take questions, and like I said, Elisha said, I'll be in Atlanta this weekend as well. And this really is. I try to do my best to make it a simple concept at first. There's kind of layers to it you have to peel back, but yeah, that's all I got.
All right, yeah, man. So I appreciate you joining us this evening, and ultimately, actually, let me plug this in real quick. Ultimately, I just want to say, I look forward to talking to you this weekend and learning more about this program. We did have one person that raised their hand, and if there are any other questions, please just go ahead and raise your hand. All right. So look, Shawana, how you feeling today?
Hi, I'm feeling awesome. Thank you for bringing me up, and thank you for sharing this information.
Oh, no doubt. Please introduce yourself and let us know what your question is.
Okay, my name is Shawana Dennis. I'm a new owner-operator of Poodle Express. I'm in business with my brother. He's actually down below. That's why I raised my hand, because earlier you all were talking about, I think, Mr. Petty. He's not here anymore. Mm-hmm. You all were speaking about insurance. And being that we are new owner-operators, we are having some issues with insurance. He probably has the questions. If you would like to bring him up and take me down.
Okay. Yeah. I mean, it's up to brother. You want to raise his hand?
He's new to this as well. Okay. Dimitri. His name is Dimitri. He's at the bottom.
Oh yeah. He just raised his hand. What's up, brother?
Okay.
Let me go ahead and bring up this brother man up here. All right. Let's see. I extended the invite. All right. We got Dimitri. What's up, man? How you feeling today?
Feeling good. Can you hear me?
Yes, sir. Loud and clearly. What's your question?
Well, I kind of came in on the tail end, but as a new owner-operator with my sister, I got quoted like an insurance like $48,000 for the year. Mm-hmm. And I feel like, and it's still progressive, and at first it was like 26. It was like, like 26,000 because I had a new, it was my sister. She only had like 6 months of CDL experience. And it was kind of urging me, like, if you found somebody with more than 2 years, it'd be significant difference. So when I went to change it and I got a guy with 20 years of driving, the premiums went up $900. Like, man, what are y'all doing? Like, I'm not dumb. Mm-hmm. Like you as an agent told me, and like almost like knocking on the wood, like, hey, find somebody else. And then you raise the premium.
Okay.
So I'm like, this doesn't make sense to me.
Okay.
They don't have any points. They're actually driving for a big name, a local company, and almost like a perfect person. And it's like, they're still not budging. They give me all these different, I won't even say excuses, like they're dodging the fact that the agent actually told me if I got somebody who has more than 2 years experience, that it'd be cheaper, and it wasn't.
Okay. Well, can I ask one question, brother?
Yes, sir.
How sure are we about that driver's record?
I'm very sure.
Are you going off of the word of the driver, or is there more so, something that's actually on that driving record?
Well, I can't be say 100% because I didn't run like a police background check.
Right. I mean,
he's not. I mean, I grew up with him, and I ain't saying that means a lot, but he does. Yeah. And I asking those questions as well. It's like, man, I ain't had so much of it as a speeding ticket.
Right. Okay. Well, to be honest, man, I really wouldn't be able to do anything but speculate right here And, you know, I do know we have somebody else that's on stage that is also an insurance agent. You know, Will, have you ever encountered this type of thing? I know that, trucking is something that you're moving into, but would you be able to say anything as to, from your professional experience, why someone with a lot of experience would, actually raise the premiums?
Yeah. So, and Jory, I think you hit it on the head of one. It's kind of that, because just the first thing would be, hey, yeah, they may have had 20 years of experience, but if they had, a couple different things hitting on their driving record that's affecting it, obviously that's going up. And I know that's kind of a natural thing to think. And again, this is probably oversimplifying it and what everybody already knows. But when the insurance company is rating you or coming up with your premium, again, I hit the three factors that they're looking at. But they're looking at you and they're making a bet on you that, hey, we're going to charge them this premium and they're going to cost us less than that. So I say that to say whatever they saw, if that was the only, again, this is all speculation, just like what Jory said, but if that was the only change you made and they truly do not have any MVR points, there has to be another change, because like you said, if they have more experience, it should only help your rate. And so I would again, I don't know your driver. I know you know him personally, but if it was just them saying, oh no, I don't have anything, I would probably have to, just with everything you said, make the assumption that maybe they forgot about something they had, or they didn't realize something was going to pull. Because with the experience issue, that's really it. Is that they have more experience. It has to be something hitting on their record. Because just like whatever agent you used, I would agree with them in saying, yeah, if you get somebody with a that has more experience, that's less risk to Progressive, and therefore they're going to give you a better rate. So they had to have seen something, and the only speculation is that it was something on their record.
So should I reach out to somebody, a different company with the same person, and see if the same thing comes up? Because I mean, the guy has no reason to lie to me. We grew up together. It's like we're the same age. We grew up together, kids, same neighborhood, around the street from me, and he was, that's being straight up. There's no reason to lie. Like, when a person on a loyalty issue, they ain't gonna go to the extent in knowing that you it can be ran and word on the line. So it's like I know, but
okay,
unless I'm proven wrong.
Well, look, I'm gonna say this, brother. MVR is not expensive, so that's all you're really looking for. You just need to run an MVR on, brother. I mean, it's nothing crazy, but that should be something that should be done anyway when you have a trucking company and you're looking to bring somebody on, because it's a business decision. It's nothing more than that. So,
well, Jory, not meaning to cut you off, but we are fairly new. So,
my bad. Yeah,
you're right. MVR is. I didn't think of that myself. We can actually go up to the DMV, because I went up there and I got mine for like $12 or $13.
Yeah, but, very affordable.
My question is this, because we are out of Florida. Can you, Will, or anyone in the audience recommend another insurance company where we can possibly get a quote?
Yeah, so one thing I will say, I'll circle back and say, specifically with Progressive's hit or miss. Some people love them, a lot of people hate them, because they're one of the few that will write new, and anything that's not a perfect risk because new or because of driving issues, Progressive will write. So you may check. I know Elisha mentioned them earlier, but Canal, I've seen them do some of that same type of risk. Frankly, if you go to I don't know what agent you're dealing with, but there are a few markets that basically compete in the same market as Progressive of being able to write that. But one thing I would say, to circle back with that agent on Progressive, is that when sometimes this may be it. When you progressive, really anybody, if the business owner is not involved in the daily operations, that will hurt your rate. And so if when he took y'all's first driver off that was considered an owner or in the daily operations, and added a driver that's now just a driver, an employee, not a owner, it may have, the way they did it may have either said, hey, the owner's not active anymore in the business and that'll hurt your rate, or it may just have, because the owner wasn't a driver, or one of the owners is not a driver, and you made that switch. Again, I don't see it going
does make
26
sense
to
because
46, but
yeah, that makes plenty of sense because he had me listed first as the driver, but I only had 6 months CDL experience. But when he took me off and added someone that had more experience, they raised it to $900. So yeah, that does kind of make sense because I was listed as an owner operator as well.
okay, that again, from the details I have, that sounds like that could be it. So you may get them to play around with seeing if there's sometimes they can leave you on and put the other one on. Now that's going to be 2 drivers, so typically that's still not going to net out. It just, frankly, as bad as it sounds, sometimes it just comes down to, for the first year or so, you just got to get by with what it is, and then it drops significantly after that. But from given what you're saying, I'd say, to answer both your questions, I'd look at Canal, as well as you may see if they can kind of play with it a little bit with Progressive to see if they can satisfy everything Progressive's looking for, of having an owner, to make sure that they know the owner is in the daily operations without necessarily having to rate both drivers.
Okay.
All right.
Thank you.
Well, cool.
Thank you.
No doubt. Look, appreciate y'all for coming up to the stage, and God bless y'all with the business. I'm happy that you were able to come on stage and ask your question, but I wouldn't limit it to that, because with you guys being fairly new, I would actually tell you to use this platform, use the Transportation and Logistics Clubhouse to start rooms, with descriptions of the things that you guys are looking to learn. I mean, because ultimately that's how this group on Clubhouse came to be. I had a lot of questions, and, I needed to build a community of folks who were willing to share. And I feel like that's exactly what's been, created here. Folks are definitely willing to share the information. So, just feel free to, I think you guys are members of the Clubhouse already, Transportation Logistics Clubhouse.
Yes, I've been on here a lot, and I'm obtaining a lot of knowledge from just listening to a lot of different rooms, all the trucking rooms. My brother, he's, like I say, fairly new, so he'll get around to it. I teach how to maneuver this.
Okay, well, cool. Yeah, but if there's anything I can do to help, just feel free to reach out to me. You can email me, or you can reach out to me on Instagram or on Clubhouse now that they have these direct messages. So yeah, feel free.
I really appreciate it, because I was about to quit.
Oh, no, man, it's just beginning. I don't know if you heard Elisha's story, but Elisha said that the beginning of his own agency came because he was fired, from a previous job, so I mean, it might be a little challenging, but don't give up. I'm actually a product of that too. I've been fired and it was not fun. It hurt. But, through all of that, I kind of found something that I love. And, I've really just been having the mindset of just not giving up, just keep going. So, and I'm definitely getting better and better every day. And I'm feeling it. I'm seeing it, different opportunities, different options. So, nah, bro, y'all keep going. And if there's anything I can do to help, just let me know. Yeah. So, but appreciate y'all. I can't hear you if you are talking right now, brother.
Thank you, Jory. That was it.
Okay, well, cool. So it looks like we just had one more question pop up. But after that, we're turning off hand raising because we've been on this thing for 2 hours. And, your boy's still dispatching at this point. I still got stuff to do. But anyways, we did have Tammy join us. Tammy, can you please introduce yourself and let us know what your question is?
Hey, hello. This isn't Tammy. This is Reggie, her husband.
Hey, Reggie, how you doing, brother?
I'm fine. I've been enjoying your show, and I've been listening to everybody. I am a former truck driver. Now I'm a broker.
Uh-huh.
I broker loads to different trucker companies and things like that. But I listened to the young lady that you were talking about insurance, and one of the things that would cause an insurance rate to go up. One thing that most independent truckers don't realize is that if you're working for a trucking company and then you jump from company to company to company, as you're getting different insurances written and they're seeing that as they look at your work history, it's like a credit thing that is going to show that you're unstable as a driver, but they're still going to give you that chance. They're going to write the policy. But when they write that policy, you're going to get a high premium.
Oh, wow.
And that's what happens. It's not a well-known thing, but yeah, if you're jumping from job to job and to get a better like mileage rate, like a long time ago when I drove, I started driving for CRST and they were paying me 8 cents a mile.
Woo. Man, that had to be in the beginning.
They were paying me 8 cents a mile. And I was running from Florida to Miami. That was my dedicated run all week. That's all I did just to make that money. And then I switched over and left them and went to Warner. And that's when I found out that my insurance premium was high. So then when I went with Warner, I started going East Coast, West Coast, East Coast, West Coast. And then when I got tired of that, I started doing my own thing. And boy, when I got my own truck and decided to get insurance, oh Lord, I was like, okay, I got to get another job. And when I talked to the lady, she said, well, it's because you came out of school, you went right to work with CRST, you stayed there a year, you left CRST, you went to Warner, you stayed there 2 years, you left Warner, and then you went to another trucking company to where I was hauling containers on and off the port. And I stayed there 6 months, then started my own thing. So she said, you didn't have any accidents, your driving was good, but it was your job stability that gave us pause. We we're going to give you a policy, but you're going to pay this. And that's one thing that most people don't understand is the job stability plays a role in your insurance when it comes to driving trucks cross country.
Okay. Yeah. To be honest, that makes perfect sense. It's very logical when you say it like that, but it is the first time that I'm actually hearing it. And even with you talking about your history, I would have thought you stayed at those locations long enough for it not to affect you. A year, 2 years. I mean, I could see the 6 month one, but the other ones, not so much.
I'm going back in the dinosaur days, but back in those days, they wanted, and when I became a broker, I found out because the whole gamut of it. Back in those days, you had to stay with a company. If you were to switch company to get a lower premium with another company, or you wanted to go into business by yourself, you had to have been on the road at least 5 years with no speeding tickets, no nothing, straight out clean. Which you and I know as a driver, unless you're late for your deliveries every day, somebody's going to get you for something.
Yeah.
You're going to get got. So that's what it was. They wanted you to have 5 years straight.
Yeah, I hear you.
Without any violations. So, I always say to individuals that are coming out of the gate, and they're driving as an owner-operator, especially teams, or you're signing on to another company as a new driver, if you have plans in the future to start your own business, one must know that and be aware of, for insurance purposes only, and to get everything the way that you want it, stay where you're at for at least 4 to 5 years. And in doing that, be very vigilant as to how you're driving and what you're doing when it comes to the DOT regulations.
Okay. Well, look, I appreciate that. That's some very, very good knowledge from a former driver. But, most folks would know once you're a driver, you kind of always think about, you think as a driver, So I appreciate that so much. I just sent you a message. At a later date, I'd love to talk more about what you do as a broker and the type of lanes that you have. But that right there is, that's a different discussion. But I did want to say thank you for coming up and for sharing your knowledge. Guys, tonight, this has been a good show. This has been the longest situation in quite some time. We've been up here for 2 hours, and I'm just very blessed to have had Elisha come up on stage and let us know about just the basics of commercial trucking insurance, and then for Will to come through and let us know the kind of exclusive service that he's able to offer and provide to those high performing carriers who, kind of have enough insurance premiums that they're paying as is to, kind of benefit from that captive. I look forward to seeing both of those brothers this weekend at the Leading Ladies of Logistics Trucking Conference here in the Atlanta area. So, that's what we're on. We're about getting better and being way more knowledgeable than we were yesterday. So we're going to continue that. Next week, we're going to have, a longer discussion about drayage. Next week, we're going to have some of the Transportation and Logistics Clubhouse's most, I don't know, they've been talking and participating since the beginning. One of the folks that we're going to have next week, she literally started her brokerage last December, and she's been hitting ever since. And we also have another person who is an independent agent for EPS Logistics, and they are both subject matter experts when it comes to drayage, port work, rail yard work, containers, all of it. So I'm looking forward to talking to them. And at the end of the day, y'all, I just want to say I appreciate the support as always. And if you need anything from me, just feel free to reach out to me via email or in my, here on Clubhouse. So thank you, everybody. And I pray. Oh, before I go, Will, did you want to say anything before you headed out?
No, man, I appreciate you having me. If anybody's interested in talking more, they can always email me or go to our website. I have a little bit more information, kind of a 9-minute explainer video that gives you a little bit more detail than we were able to go into tonight, or we can set up a call or whatnot. So, but other than that, man, I appreciate it. It was fun, and I look forward to Atlanta, man.
All right, brother. Well, look, thank you for sharing. And we're just going to close on that note, y'all. Y'all, everybody have a great one. And thank you, Ma. Well, my mother's still here. Aw, hey, Sean. I love you. Anyways, all right, y'all. Have a blessed night. All right, peace.
Peace.